Hello, everyone. This is Sandra with the Mortgage Center. Thank you so much for joining our webinar tonight. I have a special guest here, Eric Tufnell with RLB. We have several people registered for tonight's webinar, and we are recording it. And I just wanted to, we're just going to wait a minute or two to get started. But before we get started, Eric,
Yes.
you have been an accountant for quite some time at RLB, and tonight's topic is on mortgage financing and the self-employed. And I don't know what you find, but I find that it is tricky for people to get the type of financing that they need or want, oftentimes through their own bank. And I think part of it is that they don't understand necessarily the different types of income.
Mhm.
And so, Eric, Eric is with a company called RLB, and you're a manager, and you're also a certified professional accountant. Would you mind just going through the different types of income so that our listeners understand those categories?
Yeah, absolutely. So first and foremost, there's many different types of income. So I'll start off going into two different buckets. So there's personal income and then there's corporate income. So when you're looking and talking about personal income, you're really thinking about salary income, which is when you're an employee of a company and you get paid a T4 salary. There's also dividend income, which would be when you receive investment income, sometimes through interest, other times through dividends from a corporation. And then also on your personal tax return, there would be sole proprietor income. So that's basically when you're taking all your revenue, you're minusing all of your expenses, and then the net of that would be the income that you pay tax on your personal tax return.
Right. And this is very confusing for a lot of self-employed people, because oftentimes one of the things that I hear is, let's just say you can have a corporation, you can just be an individual,
Mhm.
right? Or you can have several employees. But sometimes when I'm talking to somebody and they own their own personal corporation,
Right.
and they're like, I don't understand why the financial institution won't give me a mortgage. My corporation makes 500,000 a year.
Mhm.
But when I look at their personal tax returns, I might only see 50 as
Right.
T4 income and maybe a little bit of dividend income. So in their mind, they're like, hey, in my corporation, we're grossing about 500 or $1 million a year. We have decent profits, but on my personal returns, they're only showing maybe 50,000 in taxable income and another 50,000 in dividend income.
Right. Yeah. So it's important to keep those two very separate, in a sense, especially kind of when going in and trying to obtain mortgage financing for a personal property. The corporate income that is separate from your personal income.
Right.
So
Yeah,
corporate.
and then there's another variation of that. So you had talked about sole proprietor income,
Correct.
and that actually appears on your personal income tax returns.
Correct.
Right?
Yes. Yeah. And it's not the total amount of sales. So let's say you made $500,000 revenue as a sole proprietor, but you had $200,000 or $300,000 of expenses. What you actually get taxed on and what shows as income to you as a sole proprietor is the $500,000 in revenue minus the $200,000 or $300,000 of expenses.
Right. And all of the prime lenders like the TDs, and I know that because we do mortgages for TD, Scotia, and a lot of the other chartered banks, they're not looking at gross business income. They're looking at net. And it's funny, I just had a conversation with a gentleman a couple of days ago, and he's like, I don't get it. My company makes 500 grand a year. And I said, well, they're not looking, and my bank won't give me like a $200,000 mortgage, because they're not looking at the gross income. They're looking at the 50,000 or the 20,000 that's showing net.
Exactly.
And
So
that's
then you
how
run
they're
into
calculating.
issues.
Yeah. And that's how they're calculating the debt ratios. Now, One of the things, though, that's very interesting is that different financial institutions weigh income differently,
Right.
right? And so when we're looking, and this is a really a great time to talk to somebody like you, right?
Mhm.
Because it's tax season. And talk to us a little bit about like this idea of income planning.
Yeah, yeah, absolutely. So when income planning, so I'm going to use the example of when you're going to obtain a mortgage here, Sandra. So if you have a mortgage and you're looking to renew in a few years, you can kind of income plan and say, okay, to your accountant, listen, in 2 years' time or 3 years' time, I'm going to be refinancing my mortgage, and I'm going to need, either getting a new mortgage or so on. Then we have the ability to, if the funds obviously are available in the corporation, to start paying a higher wage or a higher salary from the corporation, so that a higher wage and salary will show on the client's personal tax return, so that they are able to obtain a higher financing amount.
Yes, and different types of income are weighed differently. And I know what most of the prime lenders are looking at is a 2-year average,
Right.
right? So, if you have a corporation, you have T4 income, and then let's just say in 2021, you didn't declare any dividend, and in 2022, you declare a dividend, the lenders are not going to look at the dividend income because there's not a 2-year average,
Right.
right? So it's
Right.
like you said, like you gotta kind of have to have the other interesting thing, though, I wanted to mention is, and we had talked about that, there's a lot of alternative lenders
Hmm.
that will look at gross business income or net income, uh, before the
Before,
owner. Yeah.
yep, before any owner draws and stuff are taken out.
Yeah, and typically what we're finding is that the rates are somewhere between 0.75 and 1% higher than if you were just to get sort of traditional or conventional bank type financing.
Hmm.
So, like I say to customers, you kind of can't have your cake and eat it too. You can't like save like on income tax by showing a certain income on your personal tax returns and expect to get the best rates on the market.
Right. Right. Yeah.
Because
Yeah.
it's the other thing I wanted to ask you, Eric, is that there's a lot of new uh, people who have probably just started businesses within the last couple of years, right?
Hmm.
And when a new business is setting up practice, like what are some of the good habits that they need to establish when it
Yeah.
comes to like bookkeeping and accounting and all of that, right?
Absolutely, absolutely. So when you're starting up a new business, it can be quite overwhelming with the amount of things that come with that. So best practices that we tell our clients who are starting out is number one, to look into getting a bookkeeper. So a bookkeeper, they'll help with overseeing financial information of the business on a monthly or quarterly basis. So however often that you require or need it, really. They'll be maintaining your accounts payable, accounts receivable, performing the payroll function of the business as well, and as well helping out with some daily entries and reconciliations of the company. Secondly, would be to find an accountant, because you're going to have to be compliant with CRA's tax, corporate taxes and or personal taxes. So you have to make sure that you keep up with those filings as well as HST filings. And the role of the accountant is basically becoming that trusted business advisor to assist with personal and corporate tax planning. So basically looking at the big picture and taking the personal and corporate world and trying to
Putting
help
it
make that
together,
one.
yeah. The,
Exactly.
the one thing that I find is that a lot of so um what's important for us when like we have a client that's applying for a mortgage and they're self-employed
Hmm.
is demonstrating good financial stewardship. And
Absolutely.
so, sometimes it's a pain in the neck to get all of the documents together to apply for a mortgage. But I always tell our self-employed clients, more is better.
Hmm.
The more that you provide and the better organized you are, likely the better interest rate and mortgage you're going to get. Right. And I cringe when people want to chintz out on stuff like um, a bookkeeper, for example.
Right.
Right. Because how do the bookkeeper and the accountant work together?
We kind of work hand in hand. So the bookkeeper will basically be working on the corporate set of books throughout the year. And then at the end of the year, when the fiscal year has ended or the calendar year has come to an end, that's when the accountants step in and we take the records and basically make a corporate tax return, financial statements out of them, and kind of put in some tax planning strategies into the numbers as well.
Yeah, and like I'm self-employed and I have a corporation, and I've always sort of run it that way, but we do our bookkeeping on a regular basis. It costs us money, but I just find like, and then for the other customers that we help, like when they're better organized, they've got good financial records and they also have more options for mortgage financing.
Absolutely. And the way that I see it, like, yeah, having a bookkeeper will cost some money on a monthly basis or whatever, but it frees up your time as the business owner to really focus on the business and growing that business rather than doing the bookkeeping work where you can hire a bookkeeper to take care of that.
It's yeah, it's a money, it's not an expense. Like I think it's like an investment.
It really is, yeah. I would see it more as an investment rather than an expense. However, it is an allowable expense for tax purposes.
Oh, there you go. I love it. Something that's come up a few times, not just with our self-employed clients, is now a good time to buy real estate because we're in the beginning part of 2023. We've seen some depressed values and softening in the real estate market. And that's the reason why we're having this webinar today, is just to help self-employed people, especially because they're going to be thinking about their income taxes, right? So they should
Hmm.
reach out to their accountant, someone like you. But
Absolutely.
also, as we're pre-approving people, we're going to be asking for their personal tax returns. Sometimes we need 12 months worth of business bank account statements.
Hmm.
And what I usually tell people is, like, if you've owned a townhouse or a condo and wanted to move up, so let's just say you have a property of 700,000 and you were thinking, you know what, I'd like to move up because my family's grown, I've outgrown my space, and I'm now wanting to jump into $1 million property. The price depreciation, let's just say it was a 10% price depreciation, a $700,000 home that you're going to be selling is really only retracted in value by 70,000, whereas $1 million property has retracted in value by 100 grand if we're using the kind of 10% rule.
Right.
So it's not a bad time to move, especially if you're going to be moving up.
Hmm.
And as long as you've got your finances organized, being self-employed, like a lot of people can now make that jump when they never thought they could.
Right. Yeah, it might be, yeah, a good opportunity for those looking to upgrade and upsize their current living situation. And
Now,
and I've been meaning to ask Sandra, I'm apologize. So
I've been
if someone,
I've been called worse, Eric. So
my
it's
apologies,
okay.
Sandra. So what if I don't have like 2 years of history to provide? Is that a cutoff there, or are there any workarounds for mortgage financing?
Yeah, and some businesses have really grown through the pandemic. And I think you're probably seeing that where you're having consultations with people who have had a sole proprietorship and then they're moving it into a corporation,
Absolutely.
right? Because when would the tipping point be of moving into a corporation?
Yeah, so there's a few different ways to look at it. The one that I really tell my clients is that if you're a sole proprietor And if you're making more money than you need as a sole proprietor, it might be a good time to talk to an accountant to see if incorporation is the right fit for you and your business. So basically, if you're making more money than you need to live on as a sole proprietor, you're still getting taxed on that money that you're making. Whereas if you move it into a corporation, on any money that you don't have to use for living expenses,
Okay.
you're able to keep that in the corporation and invest it at the corporate level, or defer it to another tax year when you draw it out as a salary or wage.
Right. So this kind of goes along your question to me was how many years of self-employed income do you need? And
Right.
there's different sort of so like if you're going from a sole proprietorship to a corporation, there are some exceptions that we can make and saying, okay, well, it's the same business. There's some positive things happening. We can still use averages for income from a sole proprietor to a corporation if it's a new corporation. And then sometimes there are exceptions that we can make when someone has worked as a T4 employee and now has become a subcontractor
Okay.
for the same kind of company, right? So one of the things that comes to mind is sales.
Mhm.
Or let's just say the person was a T4A, they were a commission salesperson,
Right.
and now a commission salesperson for that one particular organization, but now they've gone out as a salesperson for multiple companies and now are considered self-employed. So sometimes there are some exceptions if you're staying within the same industry.
Okay.
But let's just say if I was, I don't know, what would be like if I was like working at the university as I don't know, in hospitality,
Mhm.
and now I decided to start my own website consulting business, that wouldn't work. You would
Okay.
need 2 years of
Right. Right.
self-employed income, right?
So as long as you're sticking to the same kind of industry or the same kind of field, whether it's T4 employment income or sole proprietor income, there's a
Yeah.
workaround. You can work with those.
Yeah, and usually it's like professional designations, like accountants are one. So like, yeah, or like engineers, doctors,
Okay.
some sort of like professional corporation, like some sort of profession
Mhm.
where like something related to health services to occupation. So like if it's within the same field, there are exceptions on self-employed income
Okay.
because you can almost draw a baseline on what that income is going to look like.
All
Right.
right.
So
Yeah.
interesting conversations. Eric, if somebody wanted to reach out to you, how do they find you?
Yeah, absolutely. So you can go to rlb.ca and go to our team members and find my name there, or you can email me at eric.tufnail@rlb.ca.
Okay. And I think I have it. Let me share a screen with our listeners today. And for myself, for those of you who've joined us or are listening to this on our chat on our social media channels, you can find me at skipthebank.ca. Does that work, Eric?
Fantastic.
Awesome.
Thank you
Good
very much,
job. Yeah.
Sandra.
Thank you. Have a good night.
Thank you. You too.
Okay. Bye-bye.